point. Morning down 0.1% as we wait for those Nvidia numbers. Crucial to watch what's going on with yields and what's going on with the dollar. The dollar continues to weaken. This is quite a substantial move, not perhaps the size of yesterday, but still quite a substantial move for another day. Weaker on the dollar. How far does that seem play out? And what's the link with the Treasury market? We're seeing those yields coming down once again, 4.38%, a far cry from the near 5% that we got to on that particular contract in the month of October, Tom.
Bit of a mixed picture on these futures. FTSE 100 futures pointing lower by 0.2. It's flat on the DAX. The CAC is also pointing lower by 17 points, down 0.2 as things stand.
Okay, so negativity around the futures picture. Certainly expecting a little bit of weakness then to come through on the French market. But as we pointed out, we're pretty flat to negative on US futures. So we'll keep an eye on that as well. A lot of focus, as Tom, you were mentioning, on what happened yesterday with the Treasury auction, 20-year paper being issued and that being taken pretty well. So that's seen as a sign of comfort for markets, perhaps. So this is the equity markets opening up here in Europe and opening a little bit weaker, down 0.1%, but all in grey. So not signalling any outsized, unusual moves. The Bloomberg Dollar Index, we've talked about this, another day of weakness coming through there. And we have the Swiss franc, the euro, the pound, all leaving room to gain then as a result of the weakness that we're seeing in the dollar, that sentiment setting in around whether the Fed is at peak rates already and whether we're done with the hikes from the Fed. That seems to be the driving force. We've actually seen the Chinese currency strengthen as a result of that theme as well. And this is the sovereign bond column, really echoing what we saw in the United States yesterday. We see yields coming down here in Europe as we buy sovereign debt, and a little move on natural gas in relation to what we saw yesterday. So those bigger moves yesterday not being sustained. So French and UK markets then underperformed just a little, down 0.2% on the CAC 40. Tom, what do you see in the sectors?
Well, you talk about energy. That is one of the standout sectors on the downside, currently losing 0.5%. The last time I checked, Brent was at around $81 a barrel, WTI around $77 a barrel. On a really important week, of course, for the energy markets with the OPEC Plus meeting towards the end of the week. Will there be pushback on softer pricing coming through from the Russians and the Saudis? Currently, that sector down around 0.6%. We look at technology, of course, in the lead up to the earnings picture coming through from Nvidia. Currently, that sector posting gains of 0.4% after the rally that we saw on the Nasdaq 100 yesterday. So there's a linkage there. Banks down 0.4% in the European session so far. Personal care, that took a hit yesterday on the concerns around Bayer as a sector, just edging back up into positive territory, adding 0.1%, making up for some of the losses. not all, of yesterday. And basic resources in focus for us today as well. Iron ore, linking to the China story. Sophia Horta-Acosta can unpack that for us in more detail as well. But you saw a pickup in iron ore prices. That's lifted basic resources currently up 0.6%. That is broadly the picture, mixed again across these sectors, with the benchmark European Stock 600 currently at 456. It's a level it's been hovering around for the last few weeks, currently flat in the session, Anna.
Okay, so pretty flat in the session, almost entirely so, as you point out. A real focus on technology continues to be a gaining sector today, not by much, but let's dive deeper in some of the macro themes affecting the trading day. Sophia Horta-Acosta joins us once again from the Markets Today blog. And the sentiment through the US session then, filtering through into the Asia session. We're now kind of waiting for a new catalyst, I suppose, but we continue to focus on technology, up 0.4%, as we were just looking at with Tom in terms of the European sector, and we'll wait for NVIDIA's numbers later on.
It's the AI trade, it's back. Yeah, the NVIDIA numbers are really going to be kind of the next guiding force for this trade, but there's so much excitement about it that it does seem the market is very much in a buy the dip mentality when this does unravel, but expectations are incredibly high for this stock. Earnings expectations, I mean, this is really the center of the AI trade, the AI frenzy. NVIDIA, I mean, it's a stock that's done particularly well. Also out today, though, I mean, you mentioned earlier what was happening to the dollar in the Treasury auction, Fed minutes. So, I mean, the biggest story in the corporate world right now is AI. The biggest story, perhaps, in the macro world is the central banks really pushing back against rate cuts expectations. So let's see if the Fed minutes give the market any guidance over what will happen in the next few months.
Yeah, indeed. And if they push back, if the market actually buys that pushback. On China, a bit of a mixed picture in terms of asset moves. So Chinese equities, the benchmark CSI 300 over in mainland China is flat so far in the session. But there were a few catalysts that came through. I mentioned the iron ore price. Certainly there's an expectation from investors buying iron ore that maybe things are turning a corner.
Iron ore, that's a property play,
Yeah.
I do think. I was looking actually at, we do have a Bloomberg a Chinese property developer index for the stock market, and it was up as much as 7.6%, and now it's about 3.3, so half of those gains given back. There was exuberance around this kind of idea but the initial proposal that China will have 50 property developers, both private and state-backed, on this kind of white list of property developers that it wants to support. This is expanded because it's not just the systemically important ones, but it's the smaller private companies that have been kind of a center of the credit crisis. There was optimism around that. There's optimism around the fact that China seems to want to inject some momentum into credit growth as well, really reinvigorate the economy and get construction going. But there's also, as always with China, the skepticism over whether that will work, over whether it's a sentiment play as well. You know, you can drive as much credit as you want into the economy, but will people actually want it? That's the big question.
Yeah, that is a big question. And those iron ore price moves then perhaps adding to some optimism around basic resources. That's the best performing sector in Europe. Another day of focusing on that theme here. Let's focus on the UK. We're waiting for the autumn statement, of course, tomorrow. We've heard from the Bank of England governor saying UK interest rates may have to rise again. That's two sort of different narratives that we're watching here in the UK.
Yes, and we were looking at market pricing when it opened at 7:30 on interest rates, and it did not change, Anna. It's despite Andrew Bailey really pushing back on this expectation that we'll get interest rate cuts next year. There is no hike expected in the near term, and 3 cuts very much still on the table for next year. It really shows the hard job that central bankers have in managing expectations when you do have this kind of entrenched belief that interest rate cuts are coming.
And to that point, the UK 10-year, the gilt, currently at 4.09, so yields actually coming lower, falling by about 3 basis points on the benchmark.
Trend,
money moving into gilts. A global trend, as you say.
Yeah.
The Treasury market's reflecting a similar kind of move as well. Right, Sophia Horta-Acosta, thank you very much indeed from our Markets Today blog. And of course, you can always get more from Sophia and the rest of the team at and on the front page of the Bloomberg UK website, or type TLIV go on the terminal. Plenty more coming up. This is Bloomberg.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
This is Bloomberg. This is Markets Today. We are 9 minutes into a European equity session that sees overall markets moving not very far, very quickly, but some really interesting individual stock stories under the hood. Let's get to those. Joe Easton has a briefing. Good morning, Joe.
So we're going to start in the German biotech space. We've got a massive decliner today. MorphoSys, this is dropping 30% after they announced some drug trial data last night. It's for a blood cancer drug, and it didn't show enough of improvement in symptoms for it to get FDA approval. They are warning in a statement, and as I say, that is dropping. That stock previously was worth around 5 billion, but reducing well below €1 billion now for that one. Then in terms of those dishwashers and TVs that I'm interested in, we've got AO World gaining around 5%. They are upping their EPS forecast. However, they didn't give much in terms of the demand from the consumer at the moment, so a mixed one, but those EPSs seem to be boosting that at the moment. We've also got ASOS and Marks and Spencer's from UK retail, because Deutsche Bank has just put out a note putting buy ratings on both of those stocks. They say that Christmas will be the last hurrah for UK retail ahead of the recession in the country, and they expect anemic growth after Christmas. But for now, they say you should be buying both ASOS and Marks and Spencer's as we all go Christmas shopping for those ones. Then we're going to flip over and take a quick look at some of the other earnings stories. The one we had in Stocks to Watch, Process slipping 1%. They've said their earnings could grow 50%, but Tencent, the holding that they have a 25% stake in, is a bit of an overhang. We're seeing price targets coming down there. Sonova, meanwhile, this is in hearing aids. Now, they lost a big contract over at Costco in the US, but their other clients seem to be making up for that, and they are actually boosting some of their forecasts, some of the profit guidance coming down slightly, but the revenue looks reasonably strong. AAK, believe it or not, is a 5 billion maker of vegetable oil. This gets an underweight rating over at Exane BNP Paribas. So those shares are slipping, some kind of oil-related pun with that one. Intermediate Capital is upgraded at JP Morgan, and also bear in mind we've got indicative changes from the FTSE 100 coming out this evening ahead of the final results next week, and ICP is expected to be promoted. It's a private equity company, could gain its first ever place in the FTSE 100 according to analysts at the moment. Then on the final board, we've got a bunch of ratings changes to run through as well, and also some share sales. Now, we had Monte de Paschi, that one falling 5%. The Italian government selling 25% of that stock, €292 a share. It is trading at exactly that price at the moment. Then TeamViewer, some people will know as the sponsor of Man United, suffering on the pitch, suffering on the market, selling their stock. That's down 8% at the moment. They're selling it at 13.9. It's coming below that 13.75. Gia is a maker of farm machinery. That one also selling stakes. We've got quite a lot of share sales out this morning. And then finally, Admiral, the UK insurer, is a new buy over at Citi, who says that premiums for our motor insurance keep coming up and costs are starting to come down. So they recommend buying shares of Admiral. Also Direct Line, both of those rising this morning.
OK, Joe Easton from our equities team, who, of course, would never slip up on a good oil pun. Thank you, Joe. Joining us now, let's cross over to Anika Gupta, Director of Macroeconomic Research at Wisdom Tree. Anika, we've been reflecting on the rally yesterday, particularly in US stocks. Part of that was down to NVIDIA, part of that was down to the Microsoft story. But there's still a view amongst the markets that cuts are coming through next year. Does this rally broaden from here, Anika? How much conviction do you have and the team have at Wisdom Tree that we can see further upside to these equity markets?
Very good morning, Tom. The way there have been a confluence of factors that have really helped markets. For one, we've seen yields come down, and we've also seen, a softer CPI print, and that's clearly, as you said, raising expectations for Fed cuts going forward. I think the markets could be in for a little bit of a disappointment as we head to the December Fed meeting. And I think that's because, we've seen significant easing of financial conditions indices. Alongside that, I think there is a risk that if the Fed tilts a lot more dovish at the next meeting, markets are going to be even more aggressive in pricing in rate cuts. So I think the risk of rate cuts remain quite high. And the Fed is, the market's going to test its mettle. And I think it's going to be interesting to see how long the Fed can actually hold on to 5.3. In the teeth of economic data beginning to weaken.
Yes, and it's going to be interesting. Anika, good morning. We're going to get the Fed minutes later on today, a day early because of it being Thanksgiving week, of course. We'll get those Fed minutes, but they will, of course, be backward-looking, as they always are. But as you point out, we've actually seen quite a change, quite a transformation in the Treasury market picture since the time that these minutes were being put together. And I suppose you wonder whether those who contributed would be as dovish today as they were at that time, given what we've seen with yields coming down, certainly in the 10-year.
Absolutely, Anna. We find ourselves back where we were at the September Fed meeting. We've seen, U.S. Treasury yields actually rise, take a full U-turn, and we're back at 4.4%, right where we were in September. Now, clearly, the easing of lowering of yields is going to be beneficial for equity market valuations. But I think for the U.S. in particular, it's important to look at the S&P 500 as a sum of two parts as opposed to a full index. You've got your 493 stocks representing the broader market, and you've got those 7 well-known tech stocks. And, we're in a situation where valuations aren't favoring the tech stocks, but fundamentals are favoring the tech stocks. And at the same time, for the rest of the market, the 493 stocks, you've got valuations favoring the market at a 14 times PE versus 19 times for the Magnificent Seven. Yet, fundamentals aren't so strong. So I think as investors bide away this time of uncertainty, trying to track whether economic data is going to deteriorate even further, I think they're going to look for a broader recovery of the rally, which is what we've been saying in our outlook. Yet it's important to remember that over the long term, we still believe in the fundamentals for the tech stocks. So, take, for example, margins being 22, as high as 22% versus 10% for the index. Even if you look at revenue growth, you're looking at 10%, 11% revenue growth versus 3% for the broad market. But for me, what's really important is the reinvestment ratio. These these well-known 7 tech stocks are, looking at plowing back 60% of their cash flow back in the burner. And if you compare that with the rest of the market, it's as low as 18%. So I think for this interim period of uncertainty, we expect, and especially given the seasonal period, we expect a broader recovery of the U.S. equity market. But in the long run, it's the tech stocks that really are carrying, the stronger fundamentals.
Anika, I want to get your views on the UK. We were speaking to Sam Linton-Brown of BNP Paribas earlier in the show, and he actually made the case that there are going to be more cuts coming through from the Bank of England than maybe the markets suggest. And he's forecasting we're down to 4% on the benchmark rate by the Bank of England by the end of next year. Would you push back on that view? And if so, why?
So I would push back on that view, and primarily because, you know, the UK really stands out amongst the G10. And I think the UK, the Bank of England is going to be, you know, that dovish vanguard amongst the G10, where they're going to, you know, they're aware that we in the UK have a much higher sensitivity to interest rates, given the fact that the duration of the mortgage market is a lot shorter, and hence that's going to trickle in and impact growth, and we've already seen that happening. At the same time, I think, you know, the Bank of England remains laser focused on wage growth, and although we have seen it come down and it's below their expectations at 7.7, it's the highest amongst G10 economies. And, you know, with that view in mind, we think it's going to be a slower grind for inflation coming down compared to the rest of the nations, which is why if there's anyone to pivot first, we think it's going to be the ECB. And if there's and amongst the central banks to pivot the last would be the Bank of England, in our view.
Okay, really interesting. Takes a lot of views to make the market. Anika, thank you very much. Anika Gupta, Director of Macroeconomic Research at Wisdom Tree. Thank you for your thoughts. More ahead. This is Bloomberg.
This story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behaviour was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
Welcome back. This is Markets Today, 21 minutes into the European trading day. You're currently flat across European stocks, the European stocks 600. Let's get back to one of the top stories of the day, of the week. Bloomberg has seen a memo sent to OpenAI staff that the company is in, quote, intense discussions to unify its divided staff. Employees are threatening a mass mutiny, saying they'll follow co-founder Sam Altman to Microsoft unless the board resigns. We also understand that investors are still trying to return Altman to a leadership role at the ChatGPT maker. Speaking to Bloomberg, Microsoft CEO Satya Nadella says the company is committed to working with Altman wherever he is.
We are leading in this next generation of AI technology. We continue to be committed to OpenAI, and we continue to be committed to Sam and Greg and the team, irrespective of where they are. And, I think about Sam has chosen multiple times now to work with us, and that's fantastic to see. And I think the real thing is that the capability that Microsoft has across the tech stack is what attracts great people like Sam, and people like Sam and, innovators like Sam when it comes to AI to come to us, and we are thrilled about it.
You incredibly quickly hired Sam as well as Greg. We are hearing that Sam wants to return. Investors want him to return to OpenAI. How would you feel about that?
Yeah, as I said, we really want to partner with OpenAI, and we want to partner with Sam. And so irrespective of where Sam is, he's working with Microsoft. And that is the case on Friday, and that's the case today. And I absolutely believe that'll be the case tomorrow.
Now, we understand that to support a return of Sam Altman to OpenAI, Microsoft wants some changes to the board, to governance, to its overall contract with OpenAI, so something like this never happens again. What specifically are you looking for? For example, would you want a board seat? And if not, what else?
Yeah, I think we definitely will want some governance changes so that, surprises are bad, and we just want to make sure that things are done in a way that will allow us to continue to partner well. That's about it, right? This idea that somehow, suddenly changes happen without being, in the loop is not good. And we will definitely ensure that some of the changes that are needed happen. And we continue to be able to go along on the partnership with OpenAI.
Okay, the Microsoft's CEO speaking to Bloomberg there, of course. For more on this, we are joined by Bloomberg's Subrat Patnaik. Subrat, what are the odds? We're thinking about the return, potentially, of Altman to OpenAI. We saw Microsoft stock, though, rallying 2% yesterday. Talk to us about the equity implications, the Microsoft story, as an investor, what you should be looking at in terms of next steps and the implications for Microsoft as a stock.
Microsoft has traded at a premium the entire year because of its connection with OpenAI and how well ChatGPT has done in the public. And with Sam Altman getting fired in Friday, I think what Microsoft investors really care about is having Sam somewhere, either in OpenAI or Microsoft, but not going to a Google or Meta, who are trying to get their own systems going. So yeah, investors have been very keen, and we've seen that in the stock market. And every time a headline came through, either the stocks went down on negative news, and when Sam said he's going to Microsoft, it definitely did rally yesterday.
It's really fun. It's very interesting, isn't it, watching this story develop, because there seems to be an entire lack of clarity on so many dimensions. But Microsoft is working with Sam. Seems to be the very clear message coming from Satya Nadella. Wherever he is, we're working with him. They're definitely wanting to get across that theme.
Absolutely. The tool ChatGPT is very popular, but the people behind it seem to be as important. And Microsoft is trying its best to kind of get the talent with them or work with OpenAI. They're open to both, and that's what's going to happen. But it's still quite uncertain, so we'll see a lot of share market movement. But yeah, we'll have to wait and watch.
Talking of share market movement, we brace ourselves for the NVIDIA numbers later.
Yes, absolutely. That's another Magnificent Seven, the last one to report. And for many, this is like the biggest report that will come out. What's interesting with NVIDIA is the stock has moved up nearly 24% just this month. So most of the good news is kind of like already baked into the stock. So they have little room for any kind of error when they report. So that's going to be interesting. They've just added $240 billion over this month alone. So definitely a print that everybody's kind of like keeping their eyes peeled for.
Okay, so Patnaik, thank you very much indeed in terms of the latest on the OpenAI saga, the implications, of course, for Microsoft and the stock, as I mentioned, up 2% by the end of the close yesterday. And looking ahead to those NVIDIA earnings, Anna, which, as Subrat was saying, rightly, are really, really fascinating for the broader tech story as well. Their exposure to China is one potential fly in the ointment, because, of course, there are those restrictions in terms of the higher-end NVIDIA chips being sold into the Chinese market.
Yeah, demand for chips seems to be pretty insatiable, certainly around the AI theme. But just to underscore the high expectation going into this NVIDIA number, Some analysts, according to our story, some analysts believe that Wall Street expectations for a 171% revenue increase in the third quarter are conservative. We will see if that is the case. Coming up on the programme, we'll focus back on the banking sector. That's the Citi cuts 300 senior manager roles. We'll talk about what this means for the restructuring of Citi. How far through that story are we? We'll also reflect on broader themes in the financial services industry here in the UK. This is Bloomberg. This is Markets Today. We're 30 minutes into your European trading day. Here are your top stories. Open to Altman. OpenAI is in discussion to reunify the company as it engages with its ousted leader. Meanwhile, Microsoft CEO tells Bloomberg he wants to partner with Altman wherever he is.
We definitely will want some governance changes so that, surprises are bad, and we just want to make sure that things are done in a way that will allow us to continue to partner well. That's about it.
The restructuring begins. Citi cuts 300 senior roles, amounting to 10% of top-level jobs in the latest wave of Jane Fraser's revamp. Plus, budget breaches. The EU is set to place France on its fiscal watch list as the country risks flouting the bloc's guidance. Tom, let's have a broader check on the markets. We'll get more details around the financial services themes in a moment. The French story doesn't seem to be moving bond markets too much. It's the overall Treasury theme that dominates.
Yeah, and under the hood across these equity markets, it's been quite choppy the last 30 minutes, or at least the first 30 minutes of the Tuesday open here in Europe. 456 across the benchmark, European stock 600, flat as things stand. We'll see if the FOMC minutes, if those Nvidia earnings change the direction, but it does look like a market that is searching for those additional catalysts. The DAX, though, is in a slightly different picture, currently adding 36 points at 15,938, just below that 16,000 level, adding 0.2%. One of the engineering, construction and defence companies doing quite well across the DAX. The FTSE 100, different picture here, losses of 9 points, almost 10 points, not managing to break significantly and constructively above that 7,000 or convincingly above that 7,500 level, currently off 0.1%. Across your sectors, a mixed picture. Let's change the board then. We're looking at basic resources, we're looking at energy, the lead up to that OPEC Plus meeting later this week, really important for the oil price. Oil price currently a little softer. Basic resources getting a bit of a lift coming through from optimism around the iron ore price and the China real estate story. That sector up 0.5%. Tech, we watched this on those NVIDIA earnings and the optimism that came through from Wall Street with the NASDAQ 100 rallying to the highest levels in about 22 weeks yesterday. Tech as a sector here in Europe up 0.3%. Industrials also gaining 0.3. On the downside, banks off by 0.4%. Autos also a little softer in the session so far today, down 0.3. And that is broadly the picture. Again, it's quite mixed, but there are a couple of individual stories coming through that make it a little bit more interesting. Across the benchmark, again, flat. Anna?
Yes, it's the Italian banking sector seems to be weighing on bank stocks today. Let's stick with the banking theme, but go a bit more global. Citi is said to be laying off 300 senior managers as part of the Wall Street giant's sweeping restructuring. Under CEO Jane Fraser, the bank has embarked on a massive restructuring that's set to eliminate 5 layers from the bank's management structure. Let's bring in Bloomberg's finance editor, Jenny Serrain, who's got details of this developing story for us. Jenny, good morning once again. So do these roles then that have been eliminated, does that mean that Fraser's big restructuring, it's done, and we've got plenty more of this to come?
Yeah, no, I think there's absolutely more to come. We're still really in the early innings here. Jane Fraser, she announced this big restructuring back in September. This is really just the second phase, and so she's kind of starting at the top and going down layer by layer as she's seeking to actually remove 5 management layers from this massive company. And so we're still expecting more to come. We're expecting more at the beginning of next year and kind of rolling announcements through the end of the first quarter.
What is word on the street saying about what this does to the share price? I'm looking, it's not much above flat year to date for Citi, currently trading at $45 a share. Is there a conviction that this is going to be enough to revive the stock price?
I think we're still a little bit ways off from that. I mean, Citi is a company that has made a lot of promises to investors over the years and in a lot of ways has honestly failed to deliver on those promises. And Jane Fraser has been adamant that she's not going to continue that she's going to meet her targets and that she has the strategy that is going to really turn this bank around. And so I think investors are a little bit skeptical and are just waiting to see a little bit more kind of proof in the pudding, if you will.
On a different story within the finance world, Anne Richards' unexpected departure from Fidelity International or from that role at least, and we don't necessarily know much about who's going to lead the business from here.
Yeah, no, that's exactly right. We reached out to the company yesterday and they declined to comment on the reasoning behind her departure. And so it's definitely a curiosity and something that was very unexpected.
Okay, Jenny Serrain, thank you very much indeed on the changes around the financial sector with one of the asset managers, of course, in focus, but also Citi and its restructuring. Still a ways to go on that front. Let's get to some other top red stories on the Bloomberg terminal this morning. The chief of Hamas says his group is close to reaching a, quote, truce agreement in talks with Qatar and Israel, suggesting progress in the hostage talks. His comments come after US President Joe Biden said Israel and Hamas are closing in on a deal to free hostages taken when the group stormed Israel last month. TSMC is said to be considering building a third plant in Japan that would make advanced 3-nanometer chips. The move could potentially turn the nation into a major global chip-making hub. TSMC is already in the process of building one fab in Japan for less advanced chips, and plans for a second facility have been reported earlier.
Bloomberg has learned that the software maker C3.ai has slashed jobs, citing employee performance and the need to cut costs. In a statement, C3.ai says it regularly manages out lower-performing employees and that it has over 100 open positions. The US Justice Department is seeking more than $4 billion from the cryptocurrency exchange Binance to settle its investigation into alleged money laundering, bank fraud, and also sanctions violations. Bloomberg understands that the founder of Binance could face criminal charges under the agreement. The founder, Zhao, denies the allegations. far-right populist Geert Wilders has jumped to third place in the latest survey ahead of the elections on Wednesday, setting the stage for him to enter government. According to polls released yesterday, his Freedom Party is projected to gain 26 seats in Parliament, just one seat less than the two parties currently tied for first place.
Now, Euronext expects an impressive number of European tech firms to pursue IPOs next year, despite recent cracks in the market for listings. The company's CEO told Bloomberg TV he sees a shift in asset allocation between fixed income and equities.
For sure, 23 was a quiet year in terms of IPO, but I can tell you that the number of very promising and amazing technology companies from Europe that are, in my view, quite undervalued for the moment, that are proceeding towards the IPO market is really impressive. And they will find their way through public markets sooner or later, and probably rather sooner at the beginning of 24 than later.
Talk to us a little bit about the liquidity picture here. It feels like the no-brainer trade around the world has been when you need liquidity, when things are looking tough, when there's a defensive trade at play, you immediately go to the NYSE or the NASDAQ, you put in some orders for big tech, and that's some sort of liquidity play in the global stock market. How does Euronext match that?
The average daily volume we trade on the Euronext single market is approximately 10 billion euro. It's approximately 3 times the size of the equity volumes traded in London. And we 25% of the shares traded in Europe are traded on the single liquidity pool, the single order book, the single technology platform of Euronext. So the most liquid platform for trading of stocks is definitely Euronext in Europe, and that's the outcome of the consolidation efforts that we have done over the past few years.
Are you seeing any cracks in that story? I mean, you're hearing this not just in the stock market or even here in Europe. You're hearing this around the world in the bond market. Simply this idea that in the macro context of central banks hiking, of pulling back some of that liquidity, there is seeming to be some sort of disconnect between the markets, the market makers, central banks here, and you're seeing that cross-asset. Is there evidence of that to you?
No, it's a phase. Yes, the equity market has been less dynamic over the past few months than it had been before. I think it's a transition phase where reallocation of assets is happening between the fixed income and the equity markets. There is sort of consensus pointing out to the sort of pause in interest rates hikes, which will have a positive impact on equity markets, again, sooner or later. And I think what we are observing is a sort of transition moment related to the repositioning of the consensus between the prospects of fixed income and the prospects of equity. So I'm very confident about the dynamic of 24 in this respect.
That was the CEO of Euronext speaking to Bloomberg's Kriti Gupta a little earlier this morning. Coming up on the programme, we look at the wider implications of the OpenAI saga. We'll talk about what's been going on at OpenAI, but also what some of the conversation means for the broader AI space. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. We will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back. This is Markets Today. We are 42 minutes into the European trading day. European stocks. The European Stock 600 benchmark is currently flat. Just checking in on US futures. S&P even is now down by 0.1% after the rally of yesterday. Now, Bloomberg has seen a memo sent to OpenAI staff that says the company is in, quote, intense discussions to unify its divided staff. We also understand investors are still trying to return Sam Altman to a leadership role at the ChatGPT maker. For a view on this, let's bring in Shmuel Chafetz, chairman and founder of Target Global, which has a huge portfolio of startups under its name and under its hood. What do you think, Shmuel, are the broader lessons? Good morning. Thanks for joining us in the studio.
Good morning.
What do you think are the broader lessons from this fallout around OpenAI? It's still a story that's evolving, but are there some broader takeaways about how we think about the development of AI, how we think about risk, how we think about governance around some of these companies?
Sure. I mean, it's always very tricky to give a prediction about something that's going to happen this week, because people might remember it, and chances are I'm wrong. But I think, first of all, I think it's important to remember that OpenAI has a very strange governance structure. And one of the things that I think we have to learn from this sort of last 2-3 years is that the way governance works is set up for a reason. The way that the stakeholders, the weight that different stakeholders have, it's set up for a reason. And whenever somebody tries to deviate from that, it becomes problematic. Sometimes it becomes problematic, like FTX. Sometimes, like what's happening at OpenAI. I think that's a big lesson for everybody. And of course, when you invest in someone like Sam Altman, and a very charismatic, very outspoken founder, I think you sort of have to back him till the end, right? That's the truth, as long as he's doing the right things. It sounds like it's basically a fight for the heart and soul of AI, right? For whether the commercial aspects take the lead, or some of the more complex moral, societal aspects are they in the responsibility of companies like OpenAI, right? Should a business be self-regulating?
So then would it be right, good morning to you, Shmuel, so if that's right, that's what we're dealing with, the heart and soul of AI, would it be right to draw conclusions about that from this one case? For example, if he ends up with Microsoft, or if more of OpenAI ends up with Microsoft, do we conclude the money wins and slow and steady does not win the race?
I think it's hard to predict right now who's going to be a better steward of AI, right? I think Microsoft's a huge company. It's done amazing things. Maybe it's better suited to really think through these huge questions of what AI will be for our society, right? Maybe it's better than in Microsoft than in a smaller startup. It's just hard to tell.
So I guess the follow-on question would be, to what extent you're concerned that maybe, and this is what Anna was, I guess, nodding to as well, that you end up with this concentration of power amongst the big tech names who can not only afford to hire the talent, but also afford to pay for the compute and the servers and the chips that underscore so much of this research, and have that desire to commercialize because they're listed companies. Is that a concern for you, that it becomes concentrated in the Googles, in the Metas, in the Amazons, and of course in the Microsofts?
I think it's a huge risk. I think right now that's the way it's playing out. In the tech world, it's always, it's a fascinating phenomenon, right? But you always have someone coming out of left field at some point, and there always could be surprises. But I think AI, unlike other technologies in the past, AI does give a lot of advantage to an incumbent, right? To somebody who has the data, has the resources, has the infrastructure, has the business processes. So it's kind of, I think, almost bound to, for now, be in those big platforms. And that's why, of course, it has to be treated that way, right? It has to be regulated as something that exists within those huge platforms.
Shmuel, how do you think about key man risk or key staff risk when you're investing in tech businesses? Because this is clearly thrown up by this story. And I'm not sure whether this is more exaggerated in the tech space, but, big names and big personalities in the tech world are, you can list a lot of them. They have a big profile, big persona. Is this an issue for you when you invest in tech businesses?
We invest in people. We invest in founders. We back them.
So you actually look for that kind of risk in a sense?
We look for that risk. There's no way to avoid it. I think you have to manage, right? There's a fine line between being a visionary and sometimes being just a dreamer, but you have to sort of manage that, and you have to manage people well, and you have to build governance around these very charismatic, very smart, very aggressive sometimes people. When you're able to do it and it works, you get amazing results. And when you're not, sometimes it goes horribly wrong.
Yeah, for some reason, Adam Newman is springing to mind in this conversation. Shmuel, look, stepping back from what is happening at OpenAI, look, I could go through the list of companies in your portfolio, the likes of Endel, Delivery Hero, Kazoo, Revolut, Rapid. How is your portfolio of companies faring in this higher interest rate environment, tighter liquidity environment, as we lead up to the end of the year, look into 2024? How much of them are still going to be standing? Are you confident that your portfolio companies are still going to be able to weather this storm?
So naturally, not everyone's going to be able to weather it. Not in our portfolio, not generally. We're venture capitalists. Losing companies is a part of our business. I think people forgot it. It was sort of out, but losing companies, it's not. We tell a team, don't be afraid to write things off. Don't be afraid to shut things that don't work. That is the business. If we're not shutting enough companies, we're not doing our job. We're not taking the right type of risk. We're not private equity people. We're venture capitalists. It's part of what we do. The good companies, the companies that have strong fundamentals, are going to do very well. We saw in our portfolio, the burn was cut by an average of 45% this year, and revenue still doubled. So the strong part, the companies that have the right fundamentals, they do actually well in this environment. They'll continue to do well, and they'll have a less competitive environment going forward. And they have a less competitive environment in recruiting great people and a lot of other things. And of course, AI is also a great bump to a lot of these software companies.
What excites you most on the AI front within your portfolio? Which are the businesses that you're excited about that are really using this technology well or going to in the future?
I mean, I think right now what we're seeing is companies that have strong business processes, strong customer relationships, a lot of data, who are leveraging AI to make their processes better, cheaper, to get margin and to really create some tech dividend to what they do. So companies, for instance, like TravelPerk in the travel space has really been able to change the way they communicate with a customer and create a huge delta over traditional players in the space, where it's been very hard to do in business travel for many years.
Okay, Shmuel, thanks so much for joining us. Shmuel Shafetz, Chairman and Founder at Target Global. Thank you to Shmuel for joining us on the programme this morning. Coming up, we will look at the Treasury market and forces at play, including Fed rate cut bets, that is, of course, and slowing US inflation. We'll get a view on the markets coming up shortly as the dollar declines, yields also on the back foot. This is Bloomberg.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep rain World Cup. This is a three as the economic picture covering the intersections of Hollywood, Silicon Valley.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Markets Today, 52 minutes into the European trading day. European stocks are still flat across the benchmark European Stock 600. US futures, S&P even is down 0.1% after yesterday's rally. Here's what we're watching today then, just after 10 a.m. UK time here in London. BOE Governor Andrew Bailey is due to testify to UK Parliament's Treasury Committee. We're listening out for any additional comments from the central bank governor after he suggested that rate hikes are still in the cards, potentially. And then at 3 p.m. UK time, we're going to get US existing home sales for October. An hour later at 4 p.m, ECB President Christine Lagarde speaks at an event in Germany. And at 7 p.m. UK time, we're going to get minutes from the FOMC's meeting in September, brought forward because it's Thanksgiving week. And also, of course, the big earnings story of the day, NVIDIA set to report after the bell. Let's discuss some of these topics then and bring in Noor Ali from our M Live team. And we'll start with tech, we'll start with NVIDIA. What are you, Noor, going to be focused in on when it comes to those NVIDIA earnings?
Well, look, there's a lot at stake here. We've had some analysis earlier. I was talking to our colleague, JP, who was telling me that, in fact, NVIDIA typically shares move about 8% on average after the last 8 earnings releases, and options markets are implying a 7% move this time, whether up or down, right? And it all depends on what NVIDIA shares do this, or the company does this time around. Now, obviously, there's demand for AI. We've seen it. I mean, that story with Microsoft and OpenAI, minus the drama, is really all about that drive for tech and that AI technology that everyone wants to be part of. The question is supply and the restrictions as well with the U.S. and China. So that's a lot at stake here for NVIDIA, and what investors will be looking for is those themes as well.
Let's talk about the UK a little, if we could, Noor. We see UK two-year yields actually rising just a little. The two-year picture is quite mixed, actually, globally. The picture's clearer when it comes to sort of 10-year horizon and a longer term, where we're seeing yields continue to rise globally. But at the two-year, the UK up a little. So, it's a mixed picture across different geographies. And this is interesting in the context of what Bailey's been saying about, this is Governor Andrew Bailey at the Bank of England, about how we might need to see another interest rate hike. The market could be responding to that. We could be seeing this, or the market could just say, actually, we're not sure we are going to see another hike, and we'll continue to price in lots of cuts. Thank you very much, Governor.
Well, it's more of the latter, right? And, well, the relationship between markets and the Bank of England is quite complicated, to say the least. Let's put it this way. But in reality, you've got a inflation that runs much higher than the 2% target that the Bank of England has. And the inflation out of the UK as well, the CPI rate is much higher among other G10 economies as well. I think Sweden was a bit higher than that. But in reality, you have a situation here where you have inflation still much higher than target. You have the real policy rate still positive, so there's still room to cut, to raise rates, apologies. But also, markets have moved on from this, right? Globally, they're expecting central banks to start cutting rates. It's a question of when, not if. And now you're seeing central banks push back on this. We've had even ECB's Winch come back yesterday and say, well, actually, they're implying more rate hikes. And that's because if yields start coming down, they're going to be doing some of the loosening of that policy instead of those rate hikes. So it's a very tricky balancing act. And I think the Bank of England and other central banks don't want to see these yields come down before inflation reaches their target.
And Treasuries, very topical. Nor we're seeing those yields come down. And we're waiting for the Fed minutes later on today. That could be backward-looking, of course, but we'll keep that under review. Thank you very much, Noor Alali, joining us from the Markets Live team. Remember, you can get up-to-date analysis and insight from Noor and the rest of the Markets Live team. MLIV Go is the function to use on the Bloomberg terminal. That is it for markets today. You can get further details from the front page of the Bloomberg UK website. You'll find the Markets Today blog there. You can click through to the blog there. You can go to TLIV Go on the Bloomberg terminal for that as well.
The Pulse is up next. Currently, European stocks are flat. US futures currently on the S&P E-minis down 0.1%. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community. When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. OpenAI says it's holding intense discussions to quell a potential staff mutiny over its ousted leader, Sam Altman. Meanwhile, Microsoft's chief executive tells Bloomberg he wants to partner with Altman wherever he is.
We definitely will want some governance changes so that, surprises are bad, and we just want to make sure that things are done in a way that will allow us to continue to partner well. That's about it.
Now, Citi cuts more than 300 senior manager roles, part of Chief Executive Jane Fraser's efforts to simplify the Wall Street giants. Plus, Germany's budget crisis deepens as the finance ministry imposes an emergency spending freeze in response to last week's ruling by the country's top court. So welcome, everyone. A lot of news we have to cover today. Let's take a look at the European markets map. Now, again, a lot of the focus will be on Fed minutes, on what we will hear from a lot of central banks out there and what that means for the market rally. Now, emerging market stocks and currencies seem to be extending a lot of the gains. Again, the dollar's weakening. Treasury yields are falling. A strong surge on Wall Street seems to be spurring demand for risk assets. If you look at some of the U.S. equity futures, they're pretty much a little changed, and some of the other things that we're looking at, of course, is artificial intelligence, with investors still trying to return co-founder Sam Altman to a leadership role at ChatGPT. Now, Bloomberg has seen a memo sent to OpenAI staff that says the company is in, quote, intense discussions to unify its divided staff. Now, we also understand that investors are still trying to return Altman to this leadership role at the ChatGPT maker. So let's get more on all of this from Bloomberg's Alex Webb. Alex, what a story. I mean, it's a whirlwind. There's a mutiny. There are two factions. There could be more warring factions. What are the odds of Altman actually returning to OpenAI?
It's looking pretty probable right now. That at least there'll be some sort of coalescence between OpenAI and Microsoft with Sam Altman having an influence. You know, this letter is pretty remarkable, really, that OpenAI has something like 770 employees. More than 740 of them have apparently signed this letter in support of Altman and criticizing the board. You meanwhile got reporting that there is work to there's a letter as well from the board itself saying they're working to unify the company. It seems as though everybody's pushing in that similar direction. Even Ilya Sutskever, who was the chief scientist, one of the board members who had voted Altman out, he has now backtracked and said he made a mistake. He should not have done that. So it all looks to go in that direction.
But so, Alex, I thought this was about, some of the I don't know whether it's virtue signaling, but it's regulation. It's basically ethics. What was the battle really about?
Well, we don't know the full details, but it's really worth reading the big take, Bloomberg big take from yesterday by our colleagues Max Chafkin and Rachel Metz. It is to do with AI safety. And a lot of these board members are quite closely aligned with the effective altruism movement. The effective altruism movement, of course, is also what Sam Bankman-Fried was a member of, or an adherent to, I should say, where the belief is essentially that you can make a huge amount of money and use those proceeds to help the world. And with OpenAI, part of the mission was actually, if we were going to develop AI in a way that is safe for the world, and that was why originally it was open and not closely aligned with the company. It looks as though there's a little bit of concern about whether it is still sticking to those values, at least from the 4 of the 6 members who voted him out.
So, Alex, what happens to him actually if he doesn't go back to the ChatGPT maker, and when do we find out what happens?
So he's signed on to become head of advanced research, or head of an advanced research team, I should say, at Microsoft. The expectation is that if that role proceeds, as at the moment it's set to do, he will potentially take a lot of the talent from OpenAI with him. A lot of them have expressed their support, as we said. That is the big concern for OpenAI, because for all of the concern about do you have enough hardware capabilities in terms of servers, AI is about talent. It's about the people who can do it. It's a relatively limited pool of talent. These big AI minds are relatively few and far between. Microsoft did not have a sizable AI research unit that is comparable to what Google has with DeepMind. It kind of got that with OpenAI. It's in a win-win situation. A little bit of complication around the edges in terms of timing, how quickly it could catch up. But if Altman stays at Microsoft or goes to Microsoft and he brings even 100 researchers with him from OpenAI, that puts Microsoft in a relatively strong place.
Alex, thanks so much for all of the updates. Alex Webb there from our tech team. Now, we'll also have more from our interview with the Microsoft chief executive a little bit later this hour. Now, back to the markets. Treasuries moved higher after an auction of a 20-year debt went ahead without a hitch. The Treasury term premium turned negative as investors, though, grew skeptical that the Fed will be able to engineer a soft landing. Well, joining us to dive into the markets is Vasiliki Pachaturidi, head of EMEA iShares fixed income strategy at BlackRock. Vasiliki, thank you for joining us. There's a lot going on in the fixed income space. It's like, hold on to your horses. What do you see the biggest trend over the next couple of weeks?
Sure. I think you captured it very well. The market is really desperate to lean into this soft landing narrative. They see inflation going down and growth obviously not hitting down the road. But we're not leaning into this story. We think that central banks, the Fed, will keep rates higher for longer. We think that, we do believe that inflation will get down to 2%, which is the Fed's target by mid of next year. But we are in this new regime, and we've been talking about that a lot. Inflation uncertainty will be high. Bond market volatility will be high. Investors will be demanding more compensation for holding longer-term bonds. But what I want to emphasize today, and you talked about the next couple of weeks, is that this challenging market environment doesn't mean that opportunities do not exist.
Right.
We've seen.
So where do you see them? I mean, it's difficult, right? Because also the market seems to be pricing one thing, which has been so far a bit of a recession or a slowdown, and actually data surprise to the upside.
Absolutely. I mean, the last couple of weeks, if I look at bond ETF data, we see investors starting to put cash to work, which is a very big shift to what we've seen, the defensive positioning that we've seen so far this year. So just in the first 2 weeks of November, we've seen a rise in high-yield ETF flows. In fact, high-yield ETFs globally have got more than $10 billion in net new assets and investment-grade credit. What does that mean? I think investors probably are betting on the U.S. economy strength, staying a bit stronger for a little longer.
But they're also, they seem to be, something that you're pushing back against, like pricing in Fed cuts. Is that wishful thinking from markets?
I think at this stage, they really try to lean on this soft.
They want the cuts.
They really want the cuts. And I think that could be a headwind for bonds, for the asset class coming into the next year. And I also think the central bankers, they clearly don't want yields to drop before they fight inflation. So I think that could be a potential headwind. But again, going back to our earlier point, opportunities do exist. The fact that the macro environment, it is challenging, doesn't mean you should sit in cash.
But when's the right time actually to come in? Is there an opportunity? Is it before the end of the year, or is there a signal that you're waiting for to say, look, this is the right time for you to enter the market?
Yeah, I think we have to look at it from two angles. I think right now is perhaps a good time to start thinking about rebuilding your strategic asset allocation. Speaking to our European clients, we know that they're probably the most underweight they've been in European fixed income. This is an overhang from the previous cycle where rates have been so negative in Europe. So it is a good time to start thinking about, how do I rebuild my core allocation going into next year? And then the other angle is that, in this environment, you have to be more tactical. You have to be more nimble. We do see a rise in dispersion if we think about spread assets, of course. So you have to be selective. And again, the flows that we've seen recently indicate that investors are ready to start deploying marginal cash and finding those tactical opportunities. But it is about rebuilding the core of portfolios and stepping in for where opportunities are.
So, Vasiliki, how do you view this? Again, is it, for example, on sector-wise? And so you look at some of the ETFs on some of the main trends that we're seeing or that we will see in 2024. You do break it down regionally.
Yeah, I think the obvious opportunity is income right now. Stable income, quality income as we go past the peak in rates. And that's why we see demand for quality ETFs with a fixed maturity. I think investors like that pull-to-par effect. Another way to add risk in your portfolio is through extending duration, and I think there we're very selective. We prefer to hold longer duration in Europe because more of the economic damage is priced in, and also they don't have some of those headwinds in the US with a fiscal budget and QT. But again, just selectivity when it comes to duration. And then with spread assets, I think that's your opportunity to really look through the regions, through the sectors, through credit quality buckets. Again, if I speak to my clients, they have a preference for high yield in the US than in Europe, but in Europe there's a quality bias.
What do you do with the UK?
What we do with the UK, exactly. I think my observation on the UK is the fact that there is very low confidence, there is very low interest from foreign investors. Valuations are attractive, but I think we need to see more foreign interest coming into this market. But yeah, we would be comfortable owning duration.
I mean, you make a very good point, which we try and cover certainly in our weekly show, also Bloomberg UK. Is there going to be a catalyst for investment coming back in? I don't know whether it's worry about a change in policy or just some of the uncertainty surrounding this government. Like, how do you, when do you play the UK with more conviction?
It's a great question. It's a golden question. I think it's for international investors also it's a relative play. They have to assess, where the opportunities, where they are. FX is another important consideration. But I know we have news coming up later this week, and politics and policy matters a lot.
Anything in Asia that you're looking at for? Again, so we try and also look at the FDI investments in China that have been, I think, turned negative for the first time since they've been recorded, and the impact this has elsewhere. What does it mean for your strategy?
I would say more broadly, emerging markets, fixed income, emerging market debt, not specifically in Asia, but I would say as a whole, as an asset class, is something that we're watching. I think it is an asset class that investors have not probably looked at in many years. So valuations are attractive, but I also think the macro context for a lot of the emerging markets is more favorable versus DM. What we're missing, obviously, is the flows, and obviously a weaker dollar could be supportive for emerging market debt.
Vasiliki, thank you so much for joining us today. Vasiliki Pachaturidi, head of EMEA iShares fixed income strategy at BlackRock. Now, coming up, hundreds of job cuts at Citigroup, but will they be enough to turn its stock price around? We discuss that next. This is Bloomberg.
Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things we have this great connection about the love for baseball, and the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
November 22nd, Chancellor of the Exchequer Jeremy Hunt delivers the UK's autumn statement. Will he deliver tax cuts? What is his plan to grow the economy? Can he set up the Conservative Party for a win next election? Live from the Houses of Parliament, Bloomberg Television brings you up-to-the-minute news and analysis. Special coverage begins Wednesday with Hunt's remarks starting at 12:30 p.m. London time. Bloomberg. Context changes everything.
Now, the conversations that matter, the insights you need. This is a pulse. I'm Francine Lacqua here in London. So hundreds of senior managers and several senior traders are leaving Citigroup as part of the bank's biggest restructuring in 2 decades. The chief executive, Jane Fraser, announced plans last month to get rid of 5 layers of management. Now, there's also change at the top of Fidelity, with the chief executive, Ann Richards, stepping down unexpectedly after 5 years. Now, for more on all of this, we're joined by Bloomberg's breaking news editor, Leo Kencherper. Leo, thank you for joining us. So what do we actually know about the job losses at Citi?
Exactly. So, first of all, as you said, it's all part of the bigger revamp announced by Jane Fraser in September, the biggest revamp in 2 decades, actually. And Citi is the main thing is actually Citi is getting rid of two core operating units and is focusing on 5 key businesses instead. And this is, I think in line with Wall Street peers. On Monday, it came through that 300 senior managers are leaving Citi, and they sit 2 levels below Jane Fraser's executive management. And there were also news that some key traders are leaving as well, among them the head of equities trading in Europe. And I think the bad news for Citi staff is that those cuts are not over yet. Citi will announce fresh cuts early next year and then hopes to complete the process by the end of the first quarter.
I mean, this is a very big overhaul. So, what kind of impact will it have?
Exactly. So shares are up since the announcement, about 9%. I just checked on that. And the other effect I see is that restructuring, of course, isn't cheap. There will be some hefty severance charges as part of these job cuts. And then I think after that, going forward, execution is really key. One key figure to watch is return on equity. I just had a look. Citi still has the lowest return on equity of all major Wall Street banks, so that's a key figure to watch next year.
Do we know what Fidelity does after Ann Richards departed?
Oh, yes. Fidelity, so first of all, Fidelity International is the arm of Fidelity outside the U.S., and there was a surprise announcement yesterday that she will be leaving, and I think so. Communication could have been a bit smoother there, but given they're owned by management and the founding family, I think they're given their assets doubled. Since 2018, I think they're looking in pretty decent shape, so not too much to worry here, in my view.
Leo, thank you so much. Leonard Ketchemper there with the very latest on some of the financial services. Now let's get to some of the other top red stories on the Bloomberg terminal. TSMC is said to be considering building a 3rd plant in Japan that would make advanced 3-nanometer chips. Now the move could potentially turn the nation into a major global chip-making hub. TSMC is already in the process of building one lab, I think, in Japan for less advanced chips, and plans for a second facility have been reported earlier. Now, Bloomberg has learned that software maker C3 AI has slashed jobs, citing employee performance and the need to cut costs. In a statement, C3 AI says it regularly manages out lower performance employees, and that has over 100 open positions. And the U.S. Justice Department is seeking more than $4 billion from the cryptocurrency exchange Binance to settle its investigation into alleged money laundering, bank fraud, and sanctions violations. Now, Bloomberg understands the Binance founder, Changpeng Zhao, or CZ as we call him, could face criminal charges under the agreement, while CZ denies the allegations. Far-right populist Geert Wilders has jumped to 3rd place in the latest survey ahead of elections on Wednesday, setting the stage for him to enter government. Now, according to polls yesterday, his Freedom Party is projected to gain 26 seats in parliament, just 1 seat less than 2 parties currently tied for 1st place. All right, coming up, Hamas's chief says the group is close to a truce agreement in talks with Qatar and Israel, reviving hopes of progress over hostages. More on that next. This is Bloomberg.
This story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behaviour was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg. Context changes everything.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, the chief of Hamas says his group is close to reaching a truce agreement in talks with Qatar and Israel, suggesting progress in the hostage talks. Joining us now for more is Bloomberg's Paul Wallace in Dubai. So, Paul, how close is the deal?
Hi, Francine. Well, that is the big question. This is the first time Hamas and its leader have said that they are close to an agreement with Israel. These are not direct talks. They're being mediated via Qatar. And it seems as if there's a good chance we get a large group of hostages that are being held by Hamas in Gaza released in the coming days. I should note that these talks could definitely still break down, and we still haven't heard a response from the Israeli government to Hamas's latest proposals. We're not exactly sure what the latest sort of negotiation point was from Hamas, but broadly speaking, it seems as if we'll get a group of about 50 or maybe even 100 hostages released, probably mainly women and children, and in return, Israel will agree to some kind of partial truce, maybe limited for a few hours a day and not to all of Gaza, but to parts of it, and also it would probably agree to release some Palestinians held in Israeli jails.
So, Paul, what would the deal mean for ceasefire in Gaza?
Again, that's a big question. Israel has been very consistent that it doesn't want to accept a ceasefire yet. It thinks that would just play into Hamas's hands and allow the militant group to regroup and to regain some of its strength. So it seems as if fighting would still be going on, even if there were truces each day for a short amount of time, and even if they included a sort of a limited pause in Israeli airstrikes over part of the territory. But as far as Israel is concerned, and as far as Israel is saying publicly, this war is continuing until Hamas is destroyed, and that's not going to change even if a large group of hostages is released from Gaza.
Paul, thank you so much for joining us. Paul Wallace there on the very latest in the Middle East. Now, coming up, the Microsoft Chief Executive Officer, Satya Nadella, says he isn't against Sam Altman's return to OpenAI. Now, we take a closer look at how the boardroom saga will affect the AI arms race. That's coming up next. In the meantime, this is what the markets are looking at. A lot of the focus, of course, is on the dollar's decline. This is spurring an emerging markets rally. If you look at the dollar declining, it's really amid a growing wager on a rapid Fed pivot to rate cuts in 2024. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Wall Street is waking up. Europe is already trading. And Manus Cranny and Danny Berger are making sure you have the news, data, and analysis you need to set your agenda. Micro, macro, and everything in between. Manus in New York and Danny in London follow the money around the globe. Take a daily deep dive into risk and help you make informed decisions for your trading day. Watch Bloomberg Brief, weekdays at 5 a.m. Eastern, only on Bloomberg. Context changes everything.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise?
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
OpenAI says it's holding intense discussions to quell a potential staff mutiny over its ousted leader, Sam Altman. Citi cuts more than 300 senior manager roles, part of Chief Executive Jane Fraser's efforts to simplify the Wall Street giant. Plus, Germany's budget crisis deepens as the finance ministry now imposes an emergency spending freeze in response to last week's ruling by the country's top court. Now, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So the Microsoft chief executive, Satya Nadella, has told Bloomberg that he would not object to Sam Altman going back to OpenAI. Now, he says Microsoft is committed to working with him wherever he is.
We are leading in this next generation of AI technology. We continue to be committed to OpenAI, and we continue to be committed to Sam and Greg and the team, irrespective of where they are. And, you know, I think about Sam has chosen multiple times now to work with us, and that's fantastic to see. And I think the real thing is that the capability that Microsoft has across the tech stack is what attracts great people like Sam, you know, and people like Sam and, you know, innovators like Sam when it comes to AI to come to us, and we are thrilled about it.
You incredibly quickly hired Sam as well as Greg. We are hearing that Sam wants to return. Investors want him to return.
to OpenAI. How would you feel about that?
Yeah, as I said, we really want to partner with OpenAI, and we want to partner with Sam. And so irrespective of where Sam is, he's working with Microsoft. And that is the case on Friday, and that's the case today. And I absolutely believe that'll be the case tomorrow.
So what are the conversations you've had with OpenAI's current board? From their perspective, where do things stand? And have you talked with Emmett Shear, the new interim CEO?
Yeah, I've had conversations with Emmett. And again, it's the same thing. There's no real difference there from where we were when we were working with Mira and she was interim CEO, when Sam was CEO, and Emmett. So my message to them, Emmett, is very clear, which is, hey, look, we remain very, very committed to OpenAI and its mission and its sort of roadmap, and they can count on us. And then, as I said, we are also very committed to Sam and Greg and team that want to join us. If they're not at OpenAI, or anyone else who is at OpenAI wants to go somewhere else, we want them to come to Microsoft and continue to work here and in partnership with OpenAI.
To your knowledge, why was Sam fired? And to your knowledge, was he involved in any wrongdoing? Has the board given you a reason?
As far as I'm concerned, we were, as I said, we were very confident in Sam and his leadership team. I've not been told about anything. They published internally at OpenAI that there is not, the board has not talked about anything that Sam did other than some breakdown in communications. And I've not directly was told by anyone from their board about any issues. And so therefore I remain confident in Sam and his leadership and capability. And that's why, we want to welcome him to Microsoft.
Now, we understand that to support a return of Sam Altman to OpenAI, Microsoft wants some changes to the board, to governance, to its overall contract with OpenAI, so something like this never happens again. What specifically are you looking for? For example, would you want a board seat? And if not, what else?
Yeah, I think we definitely will want some governance changes so that, surprises are bad, and we just want to make sure that things are done in a way that will allow us to continue to partner well. That's about it, right? This idea that somehow, suddenly changes happen without being, in the loop is not good. And we will definitely ensure that some of the changes that are needed happen, and we continue to be able to go along on the partnership with OpenAI.
Well, that was the Microsoft Chief Executive Officer, Satya Nadella, speaking with Bloomberg's Emily Chang. So what does this boardroom saga actually mean for the future of AI? Well, joining us now is Bloomberg's Mark Bergen and Matt Bloxham from Bloomberg Intelligence. A little bit obsessed with this story because it kind of came out of the blue, right, Matt? We weren't really expecting it, and it's juicy because we don't really know what's happened. There are two warring factions, if not 3 or 4, and we're not 100% sure what it's about.
No, we're not. It's almost like it's a Netflix drama in the making, isn't it, in a year or two's time? And I guess boardroom coups are not that unusual. But yeah, the speed with which this has happened and the consequences it's created, with 500 or so people at OpenAI saying they're going to leave too, it's just incredible. So this back and forth, it feels like there's at least a few more twists in the story to come.
Yeah, for sure. And I wonder, Mark, how much does this have to do with ethics? Or how much is it, actually commercial deals in the background?
I think it's very clear in part because the board that made this decision, and this was at this point, I think 3 outside board members, and then the chief scientist at OpenAI, who's since rescinded and kind of signed the letter. But the statement they put out was very thin on details, and they haven't, as far as my knowledge, haven't spoken at all. From our reporting, there is some concerns about there's a camp that believes strongly in AI safety and the harms, and that there is this existential risk that technology poses, and that the path that Altman was taking the company of moving it down the too quickly on commercialization may have been a concern. But again, there seems to be so much reporting. There's nothing substantial about what the rift is.
Yeah, Matt, what have you been hearing? How much is this true? Again, Microsoft, and it's amazing to hear Satya Nadella saying, we're committed to him, we trust him, almost no matter what. Is that because they have $10 billion tied into OpenAI, or is it, you know, the personality that we think is appealing?
Yeah, I mean, I think it's both things, and I think, you know, this kind of complex structure at OpenAI of having a non-profit with a profit within it, and these commercial tensions. You know, we've read that, you know, the pace of growth in users and managing the cost of that was kind of quite a big challenge. So you have some very kind of divergent views, I think, within that organisation that's created that tension. I have to say, I think Microsoft have played this incredibly well. They're being very pragmatic. They moved incredibly quickly. It kind of seems either way they're going to be a winner, because they've either got the kind of the crown jewels, if you like, in that team working within Microsoft, or they've reinserted them back into an OpenAI where they've got more control and influence, because that was always a weakness in the structure that they had in the first place.
But Matt, I mean, the fact that there's also a possible mutiny with people saying, look, we'll leave if he doesn't come back, is it a testament to how some of these companies work, or is it